says part A, you are required to indicate whether each of the following statements is true or false, right? Now, for this question, they just said, just indicate whether it's true or false. They didn't say if it is false, you have to, explain why is it false. If it's true, why is it true, right? So this was easy marks. So you just state whether it's true or false. So now we'll start with number 1. It says, according to the Companies Act, when appointing an auditor, the audit committee must satisfy itself that the auditor's integrity has been compromised due to previous appointments. Guys can type in the answers in the chat box, or you can unmute. Can I have answers for the first one?
False.
Okay, guys are saying false. Does one mind unmuting and telling us why is it false? Maya, how about, do you mind explaining your answer?
Good morning. I said false because the word has been compromised. When you're an auditor, you shouldn't have been compromised. Compromised means that you did something that you weren't supposed to do. So I said false because of that wording that ruins the whole sentence. Basically, it makes it false.
Okay, correct. So the Companies Act requires that the audit committee, must evaluate whether the proposed auditor is independent and whether their integrity has been maintained, right? So the purpose of the auditor is to provide an objective and unbiased opinion on the financial statements. So now the audit committee would never appoint an auditor whose integrity has already been compromised. And the statement says, must satisfy itself that the integrity has been compromised. So the audit committee must satisfy itself that the integrity of the auditor has not been compromised. So hence why the answer is false. Do you guys understand?
Yes, sir.
Okay, thank you very much. So I'll move on to number 2. Says, individuals found guilty of intentionally making false statement in terms of the Companies Act can be imprisoned for up to 10 years in terms of Section 216. Can I have answers? Can raise your hand and give me an answer and unmute.
What happened to my skin over the next 7 days? Day 1 was definitely the hardest. It felt like those tiny particles were still on my face. So I did the quickest face wash of my life and applied sunscreen. Even applying sunscreen was uncomfortable. It's like my skin was saying,
Can anyone unmute and explain their answer? Fizile, do you mind unmuting and explaining your answer? Can anyone unmute and explain their answer? Why they're saying false and others are saying true? Okay, so the correct answer is true, right? So it's because of section 214 deals with false statements. Section 216 deals with penalties. So when a person, provides false information, submits false fraudulent documents, or intentionally misleads stakeholders, criminal actions will follow, obviously, right? So the maximum penalty will include fines, imprisonment, or both, right? So the Companies Act treats dishonesty very seriously because investors, creditors, and employees rely on information supplied by the companies. So 214, it's false statements. 216, it's penalties. Do you guys understand? Do you guys understand why I said it's true? Okay, we'll move on to number 3. It says a company must acquire less than 50% of the shares of another company to become its parent company. Mm, Mahlodi, you can unmute.
Can I ask regarding the answer that the question that we just answered?
Okay.
Regarding the years given, isn't the minimum 5 years and the maximum 10 years?
Yes.
So I wanted to understand, why are you saying it's true?
Because it says, I'm sure the minimum is 5 years, as you just said, and the maximum is 10. And the statement says individuals found guilty of intentionally making false statements in terms of the Companies Act can be imprisoned for up to 10 years in terms of Section 216. And
Wait.
Section 216 is the ones that deals with penalties.
Oh yeah, I just saw the keyword. Thank you.
All right. Okay. Okay, number 3 says a company must acquire less than 50% of the shares of another company to become its parent company. Can I have answers for number 3?
Choice.
Okay. Okay, I see in the chat box they're saying false. It needs more than 50%. False, to become a parent company, a company must acquire more than 50%. Musebetsi, question 1, it's true. The answer is true. No, the answer is false, sorry. The answer was false for question 1. And then for question 2, it's true. Now we're on question 3. Cindy Wentuli, you can unmute. Cindy, where your hand is up, you can unmute. Okay. So the answer for number 3 is false, right? So yes, a parent company exists when one company controls another company. So control will usually occur when a company owns more than 50% of the voting shares. So this statement says less than 50%. So it will not provide control, right? So without control, there is no parent-subsidiary relationship, right? So the answer for this one would be false because they need more than 50%. Do you guys understand? Number 3. Okay. Number 4 says EBA is strictly prohibited from registering an individual as a registered auditor if they were ever declared insolvent, even if they have been rehabilitated. EBA is strictly prohibited from registering an individual as a registered auditor if they were ever declared insolvent, even if they have been rehabilitated. Okay, I see all of you are saying false. Tlavutelo, do you mind unmuting and explaining why you're saying false?
Morning, sir. So can you hear me?
Yes, we can hear you.
So I am saying false because the person has now been rehabilitated. They are no longer rehabilitated. I don't know.
Please repeat your reasoning again.
I was saying that the reason I'm saying false is because right the statement says IRCA is strictly prohibited from registering an individual as a registered auditor if they were ever declared insolvent, even if they have been rehabilitated. So even if someone is rehabilitated, it means that now they can perform auditing duties, not like they are unrehabilitated. So that's why I said it's false.
Okay, that's true. So being insolvent, guys, it does not permanently disqualify a person, right? So the issue here would be rehabilitation. So if you are unrehabilitated, then they cannot register you. But if you have been rehabilitated, they can register you if you meet all the requirements that are needed for you to be registered, right? So the key word here was rehabilitation. So if you have been rehabilitated, the disqualification falls away. But if you are unrehabilitated, then the disqualification still remains in place. Do you guys understand that?
Yes.
Okay. Now moving on to number 5. It says a company can have an unqualified auditor's report if the registered auditor has satisfied themselves with the existence of all assets and liabilities shown in the financial statements. Cindy Wentuli, you can unmute. I see your hand is up.
Hello, sir. Can you hear me?
Yes, I can hear you.
Sir, I just wanted you to repeat your reasoning for number 4.
Okay. So a person being insolvent, right, it does not permanently disqualify that person to be registered, right? No, sorry. The person being insolvent does qualify them from being a registered auditor. But if they are rehabilitated, then they can also be registered. But if they're unrehabilitated, then they cannot be registered to be an auditor. So the key word here was rehabilitated, right? So the person is prohibited from registering as an individual, as a registered auditor, right? But they were rehabilitated. So it means the disqualification must fall away. But if this person was unrehabilitated, then the disqualification will still remain in place. Do you understand now, Cindy?
Yes, sir, I do. Thank you.
Thank you. Okay, now we were on number 5. A company can have an unqualified auditor's report if the registered auditor has satisfied themselves with the existence of all assets and liabilities shown in the financial statements. Mahlodi, do you mind unmuting and explaining your answer? I see you're saying false.
Good morning, sir.
Morning.
Can I please have the question slide again so I can go back to the question, but then my answer remains false.
Saying, can you please have what?
The question again because it's not showing on the screen. But my
Can
answer
everybody
remains false.
can everybody see my screen?
Yes, we can.
That we can say it.
Okay. You can explain your answer, then after that you need to log out and then log back in.
Okay, can you please read the question, then I'll answer why I'm saying false.
A company can have an unqualified auditor's report if the registered auditor has satisfied themselves with the existence of all assets and liabilities shown in the financial statements.
The reason why I'm saying false simply because how can an auditor be unregistered and still uh, have the ability to perform auditor duties? You cannot be an unregistered auditor and still give opinions on a matter that's been engaged on.
Okay. Okay, so can I ask, is this
Yes,
auditor
sir.
unregistered?
Didn't you say unregistered or unqualified?
So it says a company can have an unqualified auditor's report if the registered auditor has satisfied themselves with the existence of all assets and liabilities shown in the financial statements.
Oh, it says unqualified auditor. And then going back to the section Companies Act of 2000, section 77, that speaks about standard of it's standard of directors. Okay. But I still believe the answer is false because I wanted to reference on the Companies Act, but it's speaking about directors, not auditors. Because I wanted to explain that the auditors must perform their duties with due competence and skill.
Okay, I hear you, Matloding. Is there anyone that said false and has a different reason from what Matlodi said?
And I say I had said false, but now when I look on the chat, someone has provided a reason why the answer might be true. So I think I might change my statement from false to true.
Okay. Okay, Cindy Way, you can unmute.
Yes, sir. Can you hear me?
Yes, I can hear you.
So, a director can only release an unqualified auditor's report only if he has gathered sufficient auditing evidence, and he's satisfied that the assets and liabilities are fairly presented in the financial statement. So, say I have reasoning, but I don't know whether it's true or false, because uh, I feel like if they said the auditor has sufficient auditing evidence, I would have said true, but instead they use satisfied, so I'm a bit confused. But I do have reasoning.
Okay. Well, what is your reasoning? Cindy Way.
I'm saying
Mm,
for an auditor, my understanding, for an auditor to release an unqualified auditor's report, the auditor should have gathered sufficient auditing evidence to show that the assets and liabilities are fairly presented in the financial statement. So I'm saying I don't know whether to say true or false because it's tricky, sir.
okay, no problem. Anna, you can unmute.
Hello, sir.
Morning.
My answer would be true. Reason being, they're saying a company can have an unqualified audit report if it actually when we go back to our slides, there are reasons where an auditor can issue an unqualified auditor's report. And one of the reasons is the existence of all assets and liabilities shown in the financial statement. So according to our slides, there's where they mentioned that an auditor can give an unqualified audit report if there is the existence of all assets and liabilities shown in the financial statement. So that statement on its own, it's my keyword.
That's correct. That's true. So your explanation is what makes it true. So the answer is true, right? Because an unqualified opinion means that the auditor believes that the financial statements are fairly presented. So if the auditor has obtained sufficient appropriate evidence regarding the assets and liabilities reflected in the financial statements, an unqualified opinion may be issued. So the question does not say these are the only audit procedures performed. So do you guys understand? For those that are saying false. Okay, thank you. So we'll move on to number 6. Let's see there's reactions. Number 6 says the quorum for a directors meeting is determined by the maximum number of directors present at the meeting. So the quorum for a directors meeting is determined by the maximum number of directors present at the meeting. Alvin, do you mind unmuting and telling us why you're saying it's true?
Morning. so
Morning.
I'm online. This particular question regarding the quorum always confuses me, but I say maximum because um I guess a certain number of people are required in order for the meeting to be deemed as valid. So I just think it's the maximum number. That's why I say maximum.
Okay, so the answer for this one is false because quorum for a directors meeting is determined by the minimum number, right, of directors present at the meeting. And the quorum is generally determined by the MOI and the Companies Act requirement, right? It is not determined by whoever attends that meeting. It's determined by the MOI and the Companies Act requirements. So the quorum is the minimum number. It's never the maximum. So the answer is false.
Okay, so can I ask a question?
Pardon?
Can I ask a question then?
Yes, you may.
Um, had the quorum been 5 and 7 people come, it would be valid then, right?
And the quorum being 5,
Yes, and then 7 are present.
then the meeting can start because the minimum number
Okay,
of 5 was already there.
okay, makes sense. Thank you.
Okay. Can we move on to number 7? Okay. Establishing an understanding of the terms of engagement is part of the planning stage of the audit process. Establishing an understanding of the terms of engagement is part of the planning stage of the audit process. Hello, can you unmute and explain why you're saying false? Okay, Slindelo, can you unmute and explain why you're saying false? Okay, Alvin, you can unmute and explain.
Oh, one question thing, right? What is it? C7. I
Yes,
said
7.
I said false because this is part of the preliminary engagement stage or activity.
Okay, thank you, that's correct. Do you all understand? Okay, we'll move on to number 8. As part of the responding to the risk of material misstatement, the auditor will respond to assessed risk at assertion level. As part of responding to the risk of material misstatement, the auditor will respond to assessed risk at assertion level. Can I have the answers for number 8?
The answer is true.
Okay, Mary, can you explain why you're saying true?
Because in our slide, our textbook, it says that audit procedures to respond to the assess risk of material misstatement at the assertion level.
Okay, correct. So in my reasoning, I said, right, after identifying risks, auditors design responses aimed at specific assertions, right? So the assertions will be your existence, your completeness, your evaluation, your accuracy, and your cutoff, right? So an example would be inventory theft risk, right? So the assertion would be existence, and then the response would be of the auditor is that you must attend the stock count. So the exam tip would be for you to find the risks first, then the assertion, then the procedure. So if you think in that order, then it would be easy for you to answer your assertion questions. If you think of the risk, the assertion, and then the procedure, then it's easy for you to identify uh, any question of an assertion. Do you guys understand? Okay. Okay, Alvin, can you unmute?
I'm not sure if I really understood the answer. Can you please repeat it?
Okay. So I said after identifying risks, right? So answer is true. So the answer for number 8 is true, right? As part of responding to the risk of material misstatements, the auditors will respond to assess the risk at assertion level. So the answer is true because after identifying the risks, the auditors design responses that are aimed at the specific assertions, right? So your assertions will be your existence, completeness, valuation, accuracy, and cutoff, right? Then I gave an example of inventory, right? If inventory is at a risk of being stolen at the warehouse, and then the assertion that will be affected will be your existence, right? From an auditor's perspective, right? So what you will do as an auditor is for you to attend the stock count to verify the existence of that inventory because it is at the risk of being stolen. I don't know if you understand now, Alvin.
Okay, yeah. Thank you.
Okay. Can we move on to number 9? It says assessing combined resources to meet the engagement reporting deadline is part of assessing the competency of the firm to perform the engagement. Can I have answers for number 9? Okay, Mary, can you unmute and explain your answer?
Um, uh, I'm just following like the reasoning of the question because it says assessing combined resources to meet the engagement reporting deadline. So we actually want to meet like the deadline. So it's part of assessing the competency of the firm because if the firm is competent enough, it will meet the deadline. So that's why my answer is true.
Okay. Can I ask you, Mary, which resources are they talking about here?
They didn't mention, but they said combined resources. So I guess is
So
um
so isn't it like as an audit firm, right? Before you accept an engagement, there must be resources that you must have, right?
yes.
So which ones are those
Uh,
resources?
It can be the material or the team.
Okay.
Yeah, like your work team, your material, your yeah, there is a lot of resources.
Okay. So that's correct, right? So the resources that they're talking about here, it will be your staff, your expertise, your time, right? So if you have those resources and they're sufficient for you to meet the deadline, then that's when you can accept the engagement. So without these resources, then the company cannot accept that engagement because it means that they have insufficient resources. Do you all understand? Do you all understand? Okay. Move on to number 10. It says the sufficiency of audit evidence relates to the relevance of audit evidence gathered through an engagement. The sufficiency of audit evidence relates to the relevance of audit evidence gathered through an engagement. Zivia, can you do you mind unmuting and explaining why? Zivia. Okay, Alvin, do you mind explaining why the answer is false?
This is false because the relevance of audit evidence gathered through an engagement speaks to appropriateness. So here they're talking about sufficiency. So yeah, they don't relate to each other. Or yeah.
Okay, that is correct, right? Because when you talk about sufficiency, we're talking about the quantity of the audit evidence, right? And then when you talk about appropriateness, we're talking about the quality of the audit evidence, and the quality includes relevance and reliability. So in this case, the sufficiency of audit evidence relates to relevance of audit evidence gathered through engagement is false because it's supposed to relate to the appropriateness, right? It's supposed to be appropriateness, not sufficiency. Do we all understand?
So can you please repeat?
So sufficiency, right, is the quantity of the audit evidence, and then appropriateness is the quality of the evidence, right? And the quality includes the relevance and the reliability of the evidence. So in this case, it was supposed to be the appropriateness of the audit evidence relates to the relevance of audit evidence gathered through an engagement. No, the appropriateness of audit evidence relates to the relevance of audit evidence gathered through an engagement, not the sufficiency, because sufficiency is quantity and appropriateness is quality. And appropriateness includes your relevance and your reliability.
Okay.
Okay. Can we move on to number 11? It says substantive procedures consist of test of controls and analytical procedures. Substantive procedures consist of test of controls and analytical procedures. Okay, I see everyone is saying false, which is correct. So test of controls and substantive procedures are two separate categories, right, guys? So your substantive procedures, it's your test of details, and your substantive analytical procedures. Your test of controls evaluate controls, and your substantive procedures evaluate balances and transactions, right? So I'll repeat that. So your test of controls and substantive procedures are two separate categories, right? Your substantive procedures consist of test of detail and substantive analytical procedures. So your test of controls evaluate controls, and your substantive procedures evaluate your balances and your transactions. So your controls are not substantive, right? So the answer for number 11 would be false. Do you all understand? Okay, moving on to number 12, it says materiality entails making a judgment about the timing of misstatements that will be considered material. Materiality entails making a judgment about the timing of misstatements that will be considered material. Okay, Cindy, your hand is up. You can unmute.
Okay, so I'm going to say false.
Okay.
I'm going to say false because materiality is about
Cindy, you were muted. Please unmute and explain again.
so I'm saying it's false because materiality is about size and the nature of misstatements, not timing. Timing is a different concept because timing relates to the kind of assertion.
That is correct. Explaining is 100%. Did you guys understand her reasoning?
Can she please repeat?
So do you please repeat?
Okay, can you guys hear me?
Yes, we can.
Yes.
Yes. I'm saying it's false because materiality is about size and the nature of misstatement. Timing is a different concept because it relates to the kind of assertion. Yeah, thank you.
Okay. Thank you, Cindy Will. Now we'll move on to 13. It says the audit strategy will be affected by the identification and assessment of the risk of material misstatement. The audit strategy will be affected by the identification and assessment of the risk of material misstatement. Okay, guys, can I have answers for 13? Okay, so the answer for 13 will be true, right? Because the overall strategy
So you are mute.
sorry about that. So I was saying the answer is true because the overall strategy or the strategy determines the scope, timing, and the direction. So when the risk changes, strategy will also change. So higher risk means that there's more testing, more experienced staff, and more supervision. So overall, we would say that the higher the risk, the higher the audit work. Right. So hence the answer is true for 13. You all understand. Okay. 14 says the auditor will only consider the preconditions for an audit after acceptance of the audit engagement. The auditor will only consider the preconditions for an audit after the acceptance of the audit engagement. Okay, the answer for 14 is false. And Alvin says the reason is because the preconditions are considered before acceptance, right? Which is correct. So the preconditions for an audit are considered before the acceptance, because you need to check if you have the suitable framework, if you have access to records, and you need to check the management responsibilities. So without these things, you cannot accept an engagement. Hence, the preconditions will come before the acceptance. Okay. 15 says the role of engagement quality reviewer may be undertaken by a member of the audit engagement team. The role of engagement quality reviewer may be undertaken by a member of the engagement team. Okay. The answer is false for this one. And the reasoning in the chat box says the engagement quality reviewer does not form part of the engagement team, as they must be independent, right? Which is correct, because this will create a self-review threat. So a reviewer must always be independent of the team. Right? Do you guys understand that? Okay. 16 says all forms of audit evidence are equally reliable. All forms of audit evidence are equally reliable. Okay, the answer for 16 is false, right? Because evidence varies in reliability, right? So we have most reliable evidence, which will be evidence that is directly obtained from independent parties. And then we would have the least reliable, which is your oral explanations that you get from your management, right? So you need to know that external evidence uh, is much greater than internal evidence, right? So which is the evidence from the third parties. And your written evidence is much greater than your oral evidence, right? And your original is much greater than your copy. So if you know that, then it will be easy for you to answer any question that talks about audit evidence. 17 says test of control on their own can provide the auditor with sufficient and appropriate evidence for an audit. Test of controls on their own can provide the auditor with sufficient and appropriate evidence for an audit. Guys, can I have answers for 17? Alvin, you can unmute.
I said this is false because test of controls are not enough on their own as no matter how strong the test of control can be, they cannot stand on their own because it is compulsory for substantive procedures to be done as they cannot be skipped.
So you're saying that your test of controls must always be combined with your substantive procedures,
Yes.
which is
Well,
correct.
yeah.
Okay. Can you please repeat your reasoning so that they can all get it?
I was basically saying test of control, no matter how effective or strong the control is not enough to stand on its own, as they must be accompanied or followed by the substantive procedure because they cannot be they cannot be skipped.
Okay, thank you, Alvin. I hope everyone got that. So the answer will be false. 18 says auditors normally examine a sample of transactions for audit engagements as opposed to examining all transactions. Auditors normally examine a sample of transactions for audit engagement as opposed to examining all transactions. Okay, so the answer is true, right? Because we know that modern companies, they do process thousands and millions of transactions perhaps per day. Like for example, your ShopRite, they have many transactions in a day. So testing every transaction would be expensive for them and would be time consuming. So hence why auditors will always use sampling, data analytics, and risk-based testing. So whenever you see that an auditor is is examining all transactions, it should be, you should question yourself a good see what type of a company is it? What do they do? So because auditors only do test of samples, not all the transactions. Do you guys understand? We're gonna move to question 2, no, part B now. Okay. So it says, select the most correct answer for each of the following, right? Number 1 says, which of these do not form part of the assurance engagement? Which of these do not form part of the assurance engagement? Cindy Wentuli, your hand is up.
So it's a mistake, but number B is an answer because an assurance engagement contains of a three-party relationship, which is the practitioner, a responsible party, and intended user.
Okay, correct. Okay. Number 2 says, which of the following is not an assertion? Which of the following is not an assertion? Okay, the answer is D, right? So it means you guys need to know all your assertions, because if you get a question like this and you don't know all your assertions, because I see someone was saying C. So please go study your assertions and know all of them. 3 says, which of the following is not a benefit of an audit? Which of the following is not a benefit of an audit? Alvin, do you mind explaining your answer?
Okay, so sampling is not a benefit, but it is a audit technique.
Okay. Did you guys get that? Okay, I see reactions. Okay. Move on to number 4. It says, in most jurisdictions, the auditors of a company are appointed by which party? Hello, do you mind unmuting and explaining your answer?
Hello, sir.
Hello.
The reason why I say B, it's because number one, the auditors report to, if they're appointed, they report to the audit committee. And also, according to Section 90 of the appointment of an auditor, before an audit committee they appoint the auditors, they must satisfy themselves about the auditor's independence. So this is why I said B. I'm not sure.
Okay. Tilly, so you said D. Why are you saying D? No, so not Tilly, so Alvin. Sorry, Tilly, so Alvin, you said D.
I'm gonna be honest. I don't have a particular reasoning. I just went with what felt right with my gut here. So I just say D.
Okay. So the correct answer is D. It's shareholders. right? Because the audit committee and the directors recommend an auditor, but then the formal power to appoint them is with the shareholders at the AGM, right? So at the AGM, it is for them to ensure that the auditor remains independent from management. So the auditors are appointed by shareholders, and then they're recommended by the audit committee and the directors. Do you understand?
Yes.
Yeah, thank you. 5 says, which of the following statements is true? Okay, Alvin?
So for this question, I'll start between A and B because I think both of them are true. But whoa, most never mind. Sharp. I'll say B then.
Okay. Others, what are your answers for number 5? Okay, I see you all saying B. That is correct. Okay. 6 says, to register with EBA and use the designation of a registered auditor, a person must meet certain requirements. Which of the following is not a requirement? You guys can have answers for number 6. Okay, I see everyone is saying A. That is correct. The person has worked as an audit partner for at least 5 years. Is not a requirement, right? Okay. 7 says, when considering the overall audit strategy, the engagement team must. Okay. Everyone is saying D. That is correct. D is the answer, all of the above. Okay. Number 8 says the audit plan must contain which of the following? Audit plan must contain which of the following? A is the correct answer. Then number 9 says, which of the following is not included in the main stages of the audit process? Which of the following is not included in the main stages of the audit process? Okay. Everyone is saying D. That is the correct answer. Right. 10 says, which of the following statements about hierarchy of reliability of audit evidence is true? Okay, everyone is saying C. That is correct. Okay, guys. So we're going to be quick here on C because we're running out of time, right? So it says, fill in the blanks. This section relates to the Companies Act. A director who has been disqualified in terms of section will have the disqualification lifted after how many years? Okay, Nati, your hand is up.
A director has been disqualified in terms of Section 69, and they will have the disqualification lifted after 5 years.
That is correct. Okay. Thank you, Nati. 2 says fraudulent financial reporting involves misstatements or omission of information with the aim to defraud a creditor or employee of the company in terms of Section of the Companies Act. Okay, Alvin, can unmute.
I said material misstatements, and then ish, I said section 76, standards of directors' conduct. I wasn't really sure about the section to reference.
So you said involves material misstatements and in terms of Section 76.
Yeah.
No, that is wrong. Kamohelo?
The AXE fraudulent financial reporting involves false misstatement or omission of information with the aim to defraud creditor or employee of the company in terms of Section 214 of the Companies Act.
Thank you, that is correct. So it's false or intentional misstatements, and it's Section 214. Okay. Number 3 says auditor may be automatically reappointed if no resolution is passed at the Okay. Kamohelo?
is the retiring. Then at the annual general meeting, which is the AGM.
Okay, that is correct. Thank you, Kamohelo. Now moving on to question 2, part A. All right. So your required number 1 says identify 2 threats that are created when professional accountants become aware of NOCLA. Professional accountants are expected to act when they become aware of NOCLA. One of the steps is documentation. List 2 items that professional accountants are encouraged to document. 3 will say describe how EBA may classify Mr. Molefi's conduct as a registered auditor and why. 4 says list 2 sanctions that Mr. Molefi may be subjected to if found guilty under EBA. 5 says list any example of state-owned institutions in South Africa. 6, name the institution that is responsible for conducting audits of state-owned companies, right? Then the paragraph says, Mr. Molefi is a chartered accountant employed in public practice, right? Employed in public practice and registered with EBA. Then it says he was previously employed in a state-owned enterprise. He appeared in front of a commission of inquiry for financial irregularities that allegedly occurred under his direction. Mr. Molefi denied his involvement, but was later proven that he lied to the inquiry. He subsequently admitted that he had lied to the inquiry under the instructions of his superiors. Okay. Now we can start with number 1. 2.1 says, identify 2 threats that are created when professional accountants become aware of NOCLA, non-compliance with laws and regulations. You can raise your hand and unmute. Okay, Cindy, where?
Okay, so I'm going to say self-interest threat. Reason behind is that is that I guess keep coming back. But yeah, I'm going to say self-interest threat and intimidation threat.
Okay, Cindy, where? So the two threads will be your, okay, in the chat box they say, self-interest and intimidation, and then self-interest threat, and then self-interest and advocacy. So the 2 threats would be your self-interest and intimidation threats, right? So intimidation would be to compliance with the principles of integrity and professional behavior. Do we all understand that? So it will be your self-interest and your intimidation threat. Okay. Moving on to number 2, it says professional accountants are expected to act when they become aware of NOCLA. One of the steps is documentation. List 2 items that professional accountants are encouraged to document? Okay, Alvin, you can unmute.
They must document the matter and the results of discussions with superiors, those charged with governance, and other parties.
Okay, thank you, Alvin. That is correct. Did you guys get those answers? So they will document the matter, the results of the discussion with the superiors and those charged with governance or other parties, and the course of action considered, the judgments and the decisions made, how the senior accountant satisfies themselves with fulfilling their responsibilities. So they need to document all of that. Okay. Can I move on to number 3? Okay. Says describe how EBA may classify Mr. Mulifi's conduct as a registered auditor and why. Can I have answers for number 3? Okay, the answers for number 3 is misconduct, dishonesty, improper conduct in carrying out their duties, theft, and lying. I will repeat the answers. It's misconduct or dishonesty or improper conduct in carrying out their duties or theft or lying. I hope you all got that for number 3, right? Number 4 says list 2. Okay. Kamahelo, your hand is up.
So if you say lack of integrity, is it correct or?
Okay, what would be your reasoning
Because he
behind
was not
that?
honest about his involvement in the financial irregularities occurred under his direction.
Okay. I think that would be correct because it would be underlying. Have you answered, Kamahelo?
Yes, thank you.
Okay. Moving on to number 4, says list 2 sanctions that Mr. Mulifi may be subject to if found guilty under the EBA rules. So Cindy Way, your answer was for number 4 and not number 3.
Yes, I skipped number 3 by mistake.
Okay. So your answer is correct for number 4. So the answers for number 4, the 2 sanctions would be a question or reprimand, and then they said a fine Do I have any different answers? Okay, so it would be a caution or reprimand, a fine, suspension of the rights to practice for a specific period of time, and cancellation of registration and removal of Mr. Mulifi from the register of registered auditors. I will repeat the answers. It will be a caution or a reprimand, a fine, suspension of the rights to practice for a specified period of time, cancellation of registration and removal of Mr. Mulifi from the register of registered auditors. I hope we all got that, right? Number 5 says, list an example of state-owned institutions in South Africa. List an example of state-owned institutions in South Africa. Okay, I see Eskom, Transnet, SABC, Telkom, SARS, SAA. Okay. So all the answers are correct, ne? Okay. Number 6 says, name the institution that is responsible for conducting audits of state-owned companies. Okay. The answer is Auditor General of South Africa. Thank you guys for the answers in the chat box. Okay. Now moving on to part B. It says define an assurance engagement and a non-assurance engagement. And then there are 3 types of auditors. List 3 examples. So this is a pure theory question. It's not an application question. So if you have studied, you will get the full 6 marks, right? Because it's just pure theory. There's no application to it. So can I have answers for 2.7? Cindy, where you can unmute.
Inenge 2.7 anyake. Um, an assurance engagement is a process designed to enhance the degree of confidence for intended users about the subject matter assessed against a suitable criteria. And a non-assurance engagement it's an engagement that does not meet the definition of an assurance engagement. You don't need to form an opinion at the end of the engagement. So it doesn't have a suitable criteria where you can judge your subject matter. So
Did everybody get that? Did you hear Cindy's answer, which is correct? Thank you, Alvin. Right, 2.8 says there are 3 types of auditors. List 3 examples. Okay, Alvin. Your hand is up.
We have an independent external auditor, an internal auditor, a forensic auditor.
Okay. Nati? Nati, your hand was up.
So I had said an external auditor, internal auditor, and also a special purpose auditor.
Okay. So you guys are right for saying internal forensic special purpose government. But then for external auditor, remember guys, it's not just an external auditor, it needs to be a registered external auditor, right? So it must be a registered external auditor. Don't forget that. Thank you, Tabi. So the answer will be your registered external auditor, your internal auditor, your government auditors, your forensic auditors, and your special purpose auditors. Right. I hope you guys got that. Okay, now moving on to question 3. So the required for question 3 says, in terms of the Companies Act, discuss whether the individuals or firms listed above would be eligible to be appointed as auditors of Melody. The point 2 says, name 5 functions of the Committee for Auditing Standards. Okay. So we'll start. It says the shareholders of Melody Pty Ltd, a profit company specializing in the sale of a wide range of music-related products, have recently amended its memorandum of incorporation to require that company's annual financial statements be externally audited. Based on its public interest score, the company is only required to have its financial statements reviewed. However, since none of the shareholders are actively involved in the business, they have chosen to mandate an audit through the MOI. The following individuals and firms are under consideration for appointment as the company's auditor. Right? So the candidates are, okay. Number 1, it's Liam Jacobs, is a newly qualified chartered accountant registered with EBAM. Before starting his training contract, Liam worked briefly in the accounting department of Melody during university vacations. Number 2 says Anderson and Co. is a firm of registered auditors. David Anderson, the senior partner, is one of the shareholders of Melody Pty Ltd. Thandeka Mjoli is a chartered accountant and a financial consultant who has been working on a project for the past year to help extend Melody Pty Ltd into African markets. 4 says Ben Zondi is the former financial director of Melody Pty Ltd. He left the company 3 years ago and has since built a successful practice specializing in external audits and independent reviews for medium-sized companies. Kumalo Financial Services is a small financial services firm responsible for company secretarial work, such as submitting statutory returns to the relevant authorities at Melody Pty Ltd. The audit engagement would not be handled by Kumalo Financial Services founder, Andile Kumalo, but by Tabon Glovu, a chartered accountant and partner in the firm. Okay. Maria Zondo is a registered auditor and daughter-in-law of Ben Zondi. She is a sole practitioner and does not work at Ben Zondi's firm. Right. I think we can start with. So here, they said, guys, that you need to discuss whether the individuals or the firms listed above would be eligible to be appointed as auditors of Melody, right? So we'll start with number 1. We'll start with Liam Jacobs, who is a newly qualified CA registered with EBA. Before starting his training contract, Liam worked briefly in the accounting department of Melody during university vacations. So anyone can unmute and then we can discuss number 1. Mahlodi?
Sir, I think Liam Jacobs cannot be appointed as an auditor because during her varsity years she was part of the accounting firm, which means she had access to the financial statement. And then, if I remember well, you cannot be appointed as an auditor if you have worked for the company for the past 5 years, if I'm not mistaken.
Okay. Is there anyone with a different answer? Cindy, where?
So I'm going to say Liam Jacobs cannot be part of the auditing team for Melody because a familiarity thread will arise since she is familiar with Melody Limited, and the familiarity thread is going to interfere with the judgment that Liam and the other auditing team is going to release. So the objectivity fundamental principle will be contravened.
Okay. Anyone else with a different answer? Okay, so the correct answer is that yes, he can be appointed. So Liam Jacobs can be appointed, right? Because he is registered with EBA, and for the fact that he did his vacation work at Melody, it does not exclude him, right? In terms of Section 90 of the Companies Act. So this connection to the company is unlikely to threaten or to be seen to threaten his independence in terms of the Code of Professional Conduct. Do you guys all understand that? Do you guys understand the reasoning?
Can you repeat?
Okay. Okay. So I said he could be appointed, right? Because he is registered with EBA. And just because he did his vacation work at Melody, it does not exclude him in terms of Section 90 of the Companies Act. And also, this connection of him working in the company is unlikely to threaten or to be seen to threaten his independence in terms of the Code of the Professional Conduct. And I move on to number 2. Okay. So number 2 says Anderson and Co. is a firm of registered auditors. David Anderson, the senior partner, is one of the shareholders of Melody Pty Ltd. So can I have somebody to unmute and explain if they will be appointed or they cannot be appointed? Can I have somebody to answer? Okay, Alvin.
Okay, so I'm going to say that David Anderson, or wait, yeah, Anderson and Cole, they cannot, yeah, they cannot appoint, they're not eligible to be appointed as an auditor for Melody because as per section 90, the audit committee must satisfy itself regarding the auditor's independence by ensuring that the auditor does not receive any remuneration from the company except fees for audit and approved non-audit fee services. So as a shareholder, you can receive dividends, right? So that would be into remuneration from the company except fees for audit and approved non-audit services. Yeah, like it kind of breaches section 90 from my understanding.
Okay, your answer is correct. But just to add on to your answer is that a David Anderson has financial interest in the firm, right? Since he is a shareholder. So in terms of the code, this presents as a self-interest threat to David and his firm, which he cannot be safeguarded against, right? So David Anderson could sell his shares, but is probably unlikely to do so, as he would be giving up a profitable investment for what appears to be a small audit. So did everybody get that? So I was adding on to Alvin's answer. Okay. So moving on to number 3, it says Tandegam Jolie is a chartered accountant and financial consultant who has been working on a project for the past year to help expand Melody into African markets. Can I have someone to unmute? Alvin?
Okay, so I'd say they cannot be appointed, right? Because one of the requirements on section 90 is that there must not be an employee or consultant of the company involved in maintaining or preparing financial records of the company for more than 1 year. But ish, I'm 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 stuck because they said for the past year. I don't know if it's more than a year or if it's less than a year, but essentially I'd say they cannot because obviously financial interest can arise as a threat, but yeah, I'd say they can't.
Okay, Alvin, thank you. Anyone with a different answer? Okay, so the correct answer is that she cannot be appointed because it seems like she's not a registered auditor, right? Because they're not saying anything about her being a registered auditor. They just say she's an accountant and a financial consultant. So you cannot appoint her since she's not a registered auditor. That's all. Okay. Number 4 says Ben Zondi is the former financial director of Melody Pty Ltd. He left the company 3 years ago and has since built a successful practice specializing in external audits and independent reviews for medium-sized companies. Can I have someone to unmute and answer? Okay, I'll start with Mary.
I will say that they cannot be appointed. He cannot be appointed since he left the company recently, which is less than 5 years.
Okay, thank you, Mary. Alvin, your hand was up.
So I'd say, because first of all, they're not all until Ben is not a registered auditor, but even though he was, he still wouldn't be able to be appointed because he would have fallen in one of the categories. And you cannot be appointed if you fall in one of the categories, whether it being a director or prescribed officer of the company within the last 5 preceding financial years.
Okay. I see in the chat box they're saying that he's not a registered auditor. Do you guys agree he's not a registered auditor?
No.
So would I be wrong if I say that he is a registered auditor?
No, because they said he has since built a successful practice specializing in external audits. So if he's actually practicing in external audit, it means he is registered.
Okay, that is correct. So if he is practicing if he has a practice specializing in external audits, then he is a registered auditor, right? Do we all agree on that he is a registered auditor? Okay, thank you, Kamuhelo. Right. So, my reasoning would say that we cannot appoint him now, right? Because he is disqualified by Section 90 of the Companies Act, right? Even though he is a registered auditor, right? He was up until 3 years ago a director of Melody Pty Ltd. So Section 90 requires a 5-year period to have elapsed before a former director can take up the position of an auditor. The Code of Professional Conduct requirements are less strict but overruled by the Companies Act. Did you all get that? Okay, thank you very much. Move on to number 5. It says Kumalo Financial Services is a small financial services firm responsible for company secretarial work, such as submitting statutory returns to the relevant authorities. At Melody Pty Ltd, the audit engagement would not be handled by Kumalo Financial Services founder, Andile Kumalo, but by Thabo Ndlovu, a chartered accountant and partner in the firm. Okay, can I have answers? Mary, can I have your answer?
So I'm still thinking.
Okay. Kamohelo, you can unmute.
So I'm trying, I'm not sure. I said
Okay.
the firm cannot be appointed as auditors for the company because they specialize with secretary work for the company, which is according to Section 90. You cannot be appointed as an auditor if you are the company secretary. So
Okay. Thank you, Kamohelo. So for that, it's 1 mark. You're missing another point. Okay, Alvin.
Since they stated that it would be handled by Tabo, he is merely a chartered accountant and not a registered um auditor. And the fact that he's a partner in the firm could be a familiarity threat as well as a self-interest threat because he's a partner in the firm and that he's not registered with Herba. I think I touched that, yeah. I don't know.
Okay. Thank you, Alvin. Mary, your hand was up.
No, sir.
Okay. So we cannot appoint the Kumalo Financial Services Partnership, right? In terms of Section 90, right? Because number 1, they're not registered with EBA. And number 2, they perform secretarial work for Melody Pty Ltd. So those are the 2 points on why we cannot appoint them. Do you all understand? Okay, thank you for the reactions. Number 6 says Maria Zondi is a registered auditor and daughter-in-law of Ben Zondi. She is a sole practitioner and does not work at Ben Zondi's audit firm. Mahlodi?
Maria Zondi cannot be registered, cannot be appointed as an auditor for the firm because of the familiarity threat. She is family with Ben Zondi, and therefore the her independence will be tempered with, because now she's family, and then the objectivity, what do we call this? Her objectivity is contravened in a way.
Okay, thank you, Mahlodi. Calvin?
I said that Maria Zondi can be appointed because, first of all, she is a registered auditor, and then just because she is family with Ben Zondi, it doesn't disregard the fact that she cannot be appointed, as Section 90 states that they must not be one of the following persons, being a person related to the person who during the past 5 years fell into one of the five categories. So Maria has never done any secretarial work or been a director for Ben Zondi, which means that she can be appointed.
Okay. Okay, so the correct answer is that Maria Zondi cannot be appointed. It's because of, in terms of Section 19, a person who is related to an individual is not eligible for an appointment as an auditor, right? Will also not be eligible for an appointment as an auditor. So Maria Zondi is not eligible to be appointed. So we cannot appoint Maria because she is related to Ben Zondi. Do we all understand? Okay. Thank you for the reactions. Okay. We'll be moving on to 3.2. It says name 5 functions of the Committee for Auditing Standards. So this is a pure theory question. Name 5 functions of the Committee for Auditing Standards. Oracle says it was setting auditing standards. Okay, this one, since it's a pure theory question, I think you'll find it somewhere in your slides and in your textbook, right? So it is to develop, maintain, adopt, issue, or prescribe auditing pronouncements, to consider relevant international changes by monitoring developments by other auditing standard setting bodies and sharing information where requested, to promote and ensure relevance of auditing pronouncements, user needs, liaising with registered auditors, consistent with international practices, direction and appropriateness of auditing pronouncements, may assist with comments on exposure drafts, and nominating representatives to international auditing and assurance standards boards. Welcome here. I think you can check in the first week or second week. If not, you also find them in the textbook. I think they should be in the first week or second week.
Okay, thank you.
Okay. We're moving on to part B, right? Part B says, required, identify the sections of the Companies Act that could potentially be contravened in the above scenarios, right? So, and then they say here, present your answer in the following format. So when we give you a table like this and we say present your answer like this is what we want to see when we mark. So if you do not have this, you'll make it difficult for the marker to, read through your answers. So hence they want it in a table format, right? So it says, number one, Mr. Lewis, a director of XYZ Pty Ltd, has lost his properties due to a gambling problem. The court has declared Mr. Lewis incapable of managing his finances, right? The required says identify the sections of the Companies Act that could potentially be contravened in the scenarios. Mashodi, you can unmute.
It's Companies Act of 2000, Section 69, in ineligibility and disqualification to be a director, because Mr. Lewis is declared to be insolvent and is not rehabilitated. And then also the court has stated that he is failing to manage his finances.
Okay, that is correct. And your reasoning is also correct. I hope everybody got that. Okay. Can we move on to number 2?
Can you please repeat number 1?
Okay. So the answer is section 69, ineligibility and disqualification to be a director. So Mr. Lewis has been declared insolvent. So according to section 69, therefore he is ineligible from serving as a director.
Thank you.
Did you get that, Mary?
Yes, thank you.
Okay. Moving on to number 2, it says, a registered auditor was informed by the chairperson of the audit committee that due to the company's restructuring, the next meeting will be strictly focused on restructuring matters. Any concerns the auditor wishes to raise should be postponed. Okay. Which section of the Companies Act? Alvin, can you unmute?
Um, I'd say section 90, um, appointment of an auditor, and I don't have a reasoning right now.
Okay, Alvin, thanks for trying. Kamohelo, can you unmute?
So I said section 93 because uh, that talks about the auditor's rights, whereas an auditor has a right to, what is this? To talk about their, to be heard at any shareholders meeting. And here the audit committee told the auditor that if they wish to raise any their concerns, it should be postponed, which is meaning they certain deprived them their right to be heard at any shareholders meeting.
Thank
So
you,
much.
Kamohelo. Thank you. Mary,
I think in section 76, standards of director conduct, it said that a director must not use information obtained as a result of being director. And also inform the board of any information pertaining the company unless the information is immaterial. And since the chairperson of the audit committee informed or gave information to a registered auditor about the company, like what will be happening in the next meeting, section 76 is contravened.
thank you, Mary, for trying, but the answer is not correct. So the correct answer is the one it was given by Kamohelo, which is section 93, the rights of the auditors, right? Which states that auditors have the rights to be heard at any shareholders meetings. So if the rights are infringed, right, the auditor may apply to the court to enforce those rights. So here we were looking at section 93, the rights of the auditors. Did you all get that?
Yeah.
Okay, thank you. I'll move on to number 3. It says Mrs. Harper, a director of Dodge Pty Ltd, was involved in a board decision whether where two other directors applied for a loan. However, due to the financial constraints faced by Dodge Pty Ltd, Mrs. Harper was the only director who voted against approving the loan. She incurred legal fees of 12,000 to defend the position. Nati, you can unmute.
So the section that is possibly contravened is section 77, liability for directors and prescribed officer. Because it states that a director may be held liable if they're in breach of fiduciary duty for any losses, damage, or costs incurred by the company. So now, since Ms. Harper voted against approving the loan, she incurred the legal fees of 12,000 to defend her position, which shows that there is a contravention of section 77 as she did not approve the loan.
Okay, thank you, Nati. Kamuhelo.
I said the section is section 78 because the company was supposed to indemnify her for the liability because she acted in the best interest of the company by voting against the the loan. being given. Yeah, I'm not sure if it's correct.
Okay. Thank you, Kamohelo. Cindy.
No, so I raised my hand by mistake. Sorry.
Okay. Okay, so Nati, the correct answer is section 78, right? So it's the indemnification and the director's insurance. So Dodge Pty Ltd may need to indemnify Mrs. Harper for the legal expenses incurred as she voted against approving the loan. So she will not be personally liable for the expenses that have incurred. Nati, did you get that? Okay, thank you. Okay, did everybody get that?
So it cannot
Okay.
be both.
No, it cannot be both. In this case, it cannot be both.
Okay.
Okay. Number 4 says, Mr. Kaiser serves as a non-executive director. He is a member of the audit committee at CWP Pty Ltd. The committee is set to deliberate on a tender for which a few companies applied. One of the applicants is ABC Pty Ltd, where Mr. Kaiser mother is currently employed as a cleaner. Cindy.
So I'm going to say section 76, which is standards of directors' conduct. So
Okay.
I'm saying that because a director must not use his position to gain advantage for himself or related person. A director must always act in good faith. That's my reason.
Okay. Hello.
So I said section 75, which is the director's financial interest. Because according to the section, it says when a director or a related person has a financial interest in the contract, he must disclose the interest and the general nature before it's considered, which is the director must disclose that one of the offering companies is owned by his or her sister. But with this one, Mr. Kaiser didn't disclose that the one of the applicants for the tender is where his mom is currently working as a cleaner.
Okay. Hello, your answer is correct. Can you please repeat it again so that everybody can get it?
I said the section that is contravened is section 75. According to section 75, a, a director or a related person with the financials that has a financial interest, I mean, in the contract, he must disclose the interest and the general nature of it before it is considered, which is the director must disclose that one of the offering companies is owned by his or her sister or some related, yeah, that's a family. So with this one, Mr. Kaiser did not disclose that one of the applicants for the tender is the company where his mom is currently working as a cleaner. So basically, he was supposed to disclose that one of the applicants is the company where his mom is currently working as a cleaner.
Okay. Thank you, Kamu. Can we move on to the last question? We're also running out of time. So I think we want to be quick on those questions. Okay. So it says, for each of the procedures detailed above, identify the type of audit procedure, right? So the first one is A, right? It says scrutinizing a sample of sales invoices to ensure they are properly authorized and recorded. Can I have answers? Can you guys please engage on this one since we're running out of time? Okay, inspection. That is correct. B says physical attendance of the annual stock count to ensure it is being done correctly and accurately. E. Okay, so the correct answer is observation, right? So I see Nati says recalculation. Nati, why are you saying recalculation?
If I'm being honest, I didn't read properly because the key giveaway there was physical attendance. So I don't think I read properly.
Okay. Thank you, Nati. Okay, moving on to C, it says, after reading through the accounting policy, one of the accounting staff was asked to explain how it is applied. After reading through the accounting policy, one of the accounting staff was asked to explain how it is applied.
Inquiry.
Inquiry, that is correct. Thank you very much. D says calculation of the depreciation charges to ensure that they were initially calculated correctly.
Reperformance.
Okay, Mary says reperformance. Others?
Or it can also be recalculation. I'm not sure.
Okay, Mary. Everybody else is saying recalculation for D, and it is recalculation. Right, it says calculation of the depreciation charges. So you are recalculating what was already recorded to ensure that the amounts correspond, right? So it is recalculation. E says studying the sales trends to ensure that they are consistent with prior periods or the required benchmarks. Studying the sales trends to ensure they are consistent with prior periods or the required benchmarks. Nati, your hand was up.
I was gonna say analytical procedures.
Okay, thank you, Nati. And that is correct. The answer is analytical procedures. So everyone else is correct in the chat box. F says to confirm that the internal control procedures are functioning as intended, you will carry out some of the procedures again.
Reperformance.
Reperformance is correct. Okay. Do we all understand part A and how to identify the procedures? Okay, we'll be moving on to part B, right? So part B, I think I will skip that since we're out of time and it is a pure theory question. You will get this in your slides and also in the textbook. I think in the slides of, I think week 5, week 4, you guys did the audit process. So you'll get that in the slides. It is there in the slides. Okay, we'll move on to part C. So part C says, for each of the statements above, replace the underlined words with the correct words. So it means the underlined words, they are wrong. So we need to put in the right words to make the statement correct, right? Okay. Evidence developed by the management is the most reliable source of evidence. Evidence developed by management is the Kamohelo, your hand is up.
It's the auditor himself, not
It's
management.
the audit. Okay. That is correct, Kamo. B says evidence provided directly by an assistant to the auditor as opposed to the client is reasonably reliable. Okay, so everyone is saying third party, and that is correct. So evidence provided directly by third party to the auditor as opposed to the client is reasonably reliable. C says evidence obtained from the board of directors but which was passed through the client may have been tampered with. You guys, can I have the answers for C?
I think it's third party again.
Third party, and that is correct. So evidence obtained from the board of directors, from the evidence obtained from the third party, but which was passed through the client, may have been tampered with. Right? Do you all understand that? Okay, thank you for the reactions. D says evidence generated through the third party's system will be more reliable when related internal controls are effective. I see everyone in the chat box is saying clients, and it is correct. So evidence generated through the client system will be more reliable when related internal controls are effective. Right? So the correct answer is client. E says evidence provided by the engagement letter is the least reliable as it lacks independence. Evidence provided by the engagement letter is the least reliable as it lacks independence. Hello?
It's client again, sir.
Client again. Okay, and that is correct. So for E, evidence that is provided by the client is the least reliable as it lacks independent. Okay. F says oral evidence is considered more reliable than original documents. Oral evidence is considered more reliable than original documents. Pilile, your hand is up. You can unmute.
I think the oral evidence is a written evidence is considered more reliable than the oral. I'm not sure about the last one.
Okay, please read the statement with your answers.
Okay.
So what are you placing oral with, Pilile?
I'm replacing oral with written evidence.
Okay. And then original documents.
I'm not sure.
Okay. So yes, in the chat box we're saying written evidence is considered more reliable than oral evidence, and that is correct. So written evidence is considered more reliable than the oral evidence. I think we had this one in part A, in question 1, part A, in the true or false. Okay, then G says evidence provided by duplicated documents is more reliable than evidence provided by photocopies of facsimiles. And that is correct. I see in the chat box, they're all saying original. So evidence provided by duplicated documents is more reliable than evidence provided by photocopies or facsimiles. Okay. Okay, guys, I think we have reached the end of the revision class. Thank you guys so much for attending. So I'll be here for the next 10 minutes. So anyone who has a questions, you can stay behind and ask. Okay, I will stop sharing my screen now. Kamohelo, you can unmute.
Sir, can you please send the memo in the group?
Okay, it will be shared with you guys after the class.
Okay, thank you.
Alvin, your hand was up.